Let's go over some trades that I took on euro dollar on the 19th of December and the 20th of December. So 19th of December candle, we've been bearish. We've had bearish order flow for the week. Last week we closed with bearish engulfing candle, and again this week we gapped up first, and then we pushed up during Monday, and then we started to push lower. So going into Thursday, especially after FOMC on Wednesday, which printed this strong bearish engulfing candle, my target was this previous month's low on euro dollar. So when price market opened on Monday, so this is what happened during the week, right? Monday we opened and then took out Friday's high, and then Tuesday we opened and took out Monday's high and closed bearish, and then Wednesday we closed with a very strong bearish engulfing bearish candle. So going into Thursday, I was bearish. I was watching this. I saw price pull back into this imbalance on this fair value gap, right? We put in a swing like this on the 15 minutes clearer. We had this swing, Asian session swing. I was watching this swing right up here as well at 1.0425 at the 50% off that 60-minute fair value gap. And yeah, as price printed this candle during London session, we had this sharp run up, and to me that's quite a good sign that price could potentially find resistance around that level. And I took a short as price started to move lower just there, and then price started to consolidate sideways for eternity, or what felt like eternity. Pound dollar also, I was watching pound dollar at the same time. Let's just have a look, remove all these drawings. Yesterday and pound dollar, price had started to move up, whereas euro dollar price was ranging sideways, and to me that gave me the impression that we might be seeing divergence, which was a good sign. However, because I said I predict that price could potentially run up to clear out this fair value gap and come up to this swing high right here, I put my stops above. I gave myself quite a bit of room. Also, I was busy that day, so seeing this early in the morning before leaving the house was a good sign, and I entered, left my stops gave myself quite a big room for stops, because I didn't want to be watching the charts all day. I just wanted to make sure that there was enough breathing room for the trade, and I was predicting price to come down to that low. Price continues to push up more and more, then this would have been a better sign. This push up followed by this pin bar, and then followed by this bearish engulfing candle that took out liquidity of the highs and below. Entering after that would have been a good entry. Again, London session, we had price come up, tried to fail above one, close above one time, again second time, and then start to displace lower, and then it displaces lower. Then we had some news. I believe we had final GDP and unemployment claims at 1:30 UK time, so around 8:30, which is just around here. It's coming up now. Yeah, this candle somewhere around here. So we came back up. All right, we closed below these lows, put in a market structure shift. We took out liquidity above these highs, and then we should start to displace lower now, leaving fair value gaps. Came in, tap into that fair value gap, market structure shift one more time just here, and then pull back, and then this should potentially drop down. So yeah, held that trade. Pretty happy with myself for holding that trade all this time. Also, after seeing this bearish engulfing candle on the 60-minute, I was quite a lot more confident that we might start to push lower. And then I saw three bearish candles followed by this candle that took out liquidity. This is just an order block now on the way down, and then price drops lower. And during Asian session, or just before London session, price comes down, takes out the low, all of this low, which is something I was waiting to see, but I was waiting for that to happen at previous month's low rather than this week's low. This happened, and I was still predicting maybe price would come down and take out this low, but by this point TGIF was in play. We've had bearish days for the last couple of days, market structure shift, and then price just continues higher up. So for me, I had my target set down here, and when I woke up and saw this morning, I was not happy, and then as price started to range around here, I moved my stops to break even. I got out at break even, when in reality I could have been in 1.36 profit. It's just a shame. One of the main things that I noticed here was the fact that GU had divergence with previous month's low. So this is previous month low for GU, which price took out on GU, whereas on EU we took out this week's low just above that previous month's low. And that, to me, had I seen that in real time, this happened in the morning. I was not really awake at this time. Had I seen that, when I had woken up, then I probably would have taken profit at this level. However, by the time it moved up, because I had seen my profit be in almost like 1.3R at one point when I woke up this morning, I wanted that 1.3 back really badly, and I was definitely hoping price would come back down to this low and I would exit at this low, which didn't happen, as you can see, and it pushed up, and I just started to slowly see my profit disappear more and more. And by this point, I was predicting that maybe we'll come back up to this daily time frame fair value gaps on the daily time frame right here, and I'd rather be out of that trade than it's gone too far into my profit for me to take a loss after that. So regardless, it's what it is. A lesson learned, a massive lesson learned, right? Especially Friday, I shouldn't be trying to take a low like that, especially when we had a SMT where GU took out previous month's low and EU didn't. That's one trade. Now I was looking for TGIF setup. We had Tuesday take out Monday's high, bearish. Wednesday or Thursday, ideally would have liked to see that as bearish as well, but that's fine. We put in this bearish pin bar. We took out the low early in the morning and starting to displace up with fair value gaps, right? Even though I was bearish for the week, which is fair. On the 60-minute, we started to displace up with leaving fair value gaps. I was actually waiting for price to come down to the second fair value gap and give me entry, and I would have exited my trend trade at that level. But again, that didn't happen. Price just moved up. And then we had this market structure shift again with this bullish engulfing candle. I took my entry after that at the retracement of 618, and because I usually don't trade at these highs, normally I prefer to take my TGIF setups when price is down here, pulls back, and then I much prefer taking partials off along the way, because once it's up here, I'm not sure whether price is going to reverse back. We just rejected this order block, we just rejected the start of this structure zone, and I wasn't really sure whether it was going to hold or not. I had my stop just below this low somewhere around here. Yeah, this was my entry. I was aiming for the daily time for fair value gap start at around 1.5R at a 618 retracement. It all good. However, I didn't like the way price started to close down with just these strong bearish candles. To me, that looked like we were going to come down and take out the candle's low. And this is something I say it all the time as well, but it's just something I need to consider. We had accumulation right here, and this bullish engulfing candle that took out the highs and lows of previous candle. Sometimes it's a sign that we could see a potential reversal. It just didn't happen at a key location. That's one of the reasons I was predicting that price could potentially come up to these highs. But it's just the fact that whenever this kind of candle prints, I need to give myself enough breathing room, because it could potentially wick below the candle's low, and which is exactly what it does in this case. But I was out of this trade already with like minus 0.2R loss, and then it moves in my direction. Annoying again, because I wanted the price to not come down to this low and take out this low first, and I wanted price to come down into this fair value gap on the 60-minute during New York's London session, which it didn't. But it's what it is. Price moved up. We're rejecting this fair value gap at the moment. We might even pull back right into somewhere around here, find support. push back up next week, but we'll see. It's Christmas next week, and probably quite going to be quite a quiet period. But although we've had this market structure shift, like I said, I'm still predicting price to come to the previous month's low, mainly because it's so close to that liquidity level. However, like I also said, we had SMT with GU at this low, so and that's another reason I wanted to enter this trade here, or I was confident entering the trade, just wasn't confident holding the trade, was the fact that we had SMT with GU on a monthly time frame, on the 1 hourly or even on the daily. So that was quite a big confluence to enter the trade. Same thing on GU. I was going to take a TGIF setup because we've had a bearish order flow. Better setup on GU. I did speak about this on my pre-market analysis as well. We had a Monday bullish candle. Tuesday took out Monday's high, then displaced lower. Wednesdays and Thursdays, that's perfect. Took out the low of previous major support level, like major sales high liquidity. SMT with EU, even better. And then we start to displace up. Again, we start to lose momentum as price approaches this level. To me, that's very good. We formed this channel on the 60-minute. Again, I'm a channel trader, especially on TGIF. They play out really nicely. And then we had this bullish engulfing candle after price made this low. We had a inside bar doji candle followed by a bullish engulfing candle on the 1 hour time frame, and then another bullish engulfing candle that took out liquidity of the previous candle. And to me, my prediction was we could come up and take out these highs. And after price started to displace up, I could see price coming up and taking out this high because of the fact that it's TGIF, and price could come up to at least 20% of the range of the weekly profile. So I had my 20% right there, and I was watching this 20% right there, and right above that 20% we have this liquidity, this swing, and above that we have that fair value gap on the 60-minute right there. So to me, anywhere along these lines price could have reached. So even though we took out this high, I was still quite confident that we could go up to those levels. And then we put in a market structure shift, displaced off, left a fair value gap. We put in a fair value gap there. Price pulls into that fair value gap, and it doesn't even tap into the 50% of that level. I had my entry at the 618 retracement, didn't get triggered. Looking back at it now, maybe I should have taken the retracement from this level right there and put in a 618 retracement from there, which would have been triggered. It would have been in the fair value gap below this order block as well. And then after that, we put in, prices started to consolidate. So like I said, again, I much prefer taking the trades from around this low rather than trying to take it up here. And then we had a market structure shift, and like euro dollar, I didn't really have any candles that were as strong as that engulfing on the euro dollar. So I wasn't really confident in taking a trade around here, although we've had multiple market structure shift, right? And my prediction was that we could potentially come up to that high. I didn't take any of those trades because, like I said, I prefer to take the TGIF setups when they form around here, and then like to enter on this pullback. But my pullback was from this low to that high at 618. Didn't get triggered. Maybe I could have taken it from this low to that high. We had, a fair value gap there, a order block here, and even if I wanted to take my stops below somewhere, New York open, and even if I was just taking targets at these highs, it's still 1.3R, or even if I was going up to those highs, it's almost 3R. So yeah, that's all something to consider for future, for whenever there is a fair value gap for left after price displaces up and leaves a bearish candle, you could potentially pull back into that level and find support. So yeah, not mistrade, just triggered, entry didn't get triggered, which is fine. That's what it is sometimes. But apart from that, yeah, good week. A lot of lesson learned, just people going into next year, which is good.